Every successful business runs on more than just sales and profits. Behind every well-managed company is a set of financial documents that help owners make better decisions, stay organized, prepare for taxes, secure funding, and avoid costly mistakes. In this video, we are sharing 14 small business finance documents every owner needs. Number 1. Profit and loss statement. A profit and loss statement, also called an income statement, shows how much money your business earned and how much it spent during a specific period. It reveals whether your business made a profit or suffered a loss. This document helps owners identify profitable products, monitor operating expenses, and measure overall business performance. Reviewing it regularly allows you to spot financial problems early and make informed decisions before small issues become expensive mistakes. Number 2. Balance sheet. A balance sheet provides a snapshot of your company's financial position at a specific moment. It lists everything the business owns, everything it owes, and the owner's equity. This document helps business owners understand financial stability, debt levels, and available assets. Banks, investors, and lenders often request a balance sheet before approving financing because it clearly demonstrates the overall financial health and strength of the business. Number 3. Cash flow statement. A cash flow statement tracks the movement of money into and out of your business. Unlike profit, cash flow shows whether enough cash is available to pay employees, suppliers, rent, and other expenses. A business can appear profitable but still run out of cash. Monitoring this document regularly helps owners avoid cash shortages, plan future spending, and maintain healthy day-to-day business operations without unexpected financial stress. Number 4. Business budget. A business budget is a financial plan that estimates future income and expenses over a specific period. It helps owners allocate money wisely, control spending, and prepare for upcoming costs before they occur. Instead of making financial decisions based on guesswork, a budget provides clear spending limits and realistic financial goals. Comparing actual results with the budget also helps identify areas where the business needs improvement. Number 5. Accounts Receivable Aging Report. An accounts receivable aging report lists customers who still owe money and shows how long each invoice has remained unpaid. It helps owners identify overdue accounts before they become bad debts. Reviewing this report regularly improves collections, strengthens cash flow, and reduces financial risk. Businesses that monitor unpaid invoices consistently are far more likely to receive payments on time and maintain healthier working capital. Number 6. Accounts Payable Report. An accounts payable report tracks money your business owes to suppliers, vendors, and service providers. It displays upcoming payment deadlines, outstanding bills, and total liabilities that require payment. This document helps business owners avoid late fees, maintain good relationships with suppliers, and manage available cash more effectively. Staying organized with payables also prevents missed payments that could damage the company's financial reputation. Number 7. Bank Reconciliation Report. A bank reconciliation report compares your accounting records with your bank statements to ensure every transaction matches correctly. It helps detect bookkeeping errors, duplicate transactions, missing deposits, unauthorized withdrawals, and potential fraud. Reconciling accounts regularly improves the accuracy of financial records and builds confidence in your reports. Clean financial records also make tax preparation, audits, and business planning much easier and far less stressful. Number 8. Inventory Report. An inventory report shows what products your business currently has in stock, how much inventory is available, and which items are selling the fastest. It helps prevent overstocking slow-moving products while avoiding stock shortages on popular items. Accurate inventory records reduce wasted money, improve purchasing decisions, and increase customer satisfaction. For businesses that sell physical products, this document is essential for maintaining healthy cash flow and maximizing profitability. Number 9. Payroll Report. A payroll report records employee wages, salaries, bonuses, tax deductions, benefits, and employer payroll expenses. It ensures employees are paid accurately and on time while helping the business comply with payroll tax regulations. Business owners also use payroll reports to understand labor costs and measure workforce efficiency. Keeping detailed payroll records simplifies tax filing, financial reporting, budgeting, and future hiring decisions as the company grows. Number 10. Tax records. Tax records include documents such as tax returns, sales tax reports, payroll tax filings, expense receipts, and supporting financial documents required by tax authorities. Maintaining organized tax records helps businesses prepare accurate tax returns, claim legitimate deductions, and reduce the risk of audits or penalties. Good record keeping also saves significant time during tax season because important financial information is already organized and easy to access whenever needed. Number 11. Expense Report. An expense report tracks every business expense, including office supplies, software subscriptions, travel, utilities, marketing, and operational costs. This document helps owners understand where money is being spent and identify unnecessary expenses that reduce profitability. Reviewing expenses regularly encourages smarter spending decisions and improves budgeting accuracy. Small savings across many categories can create a meaningful improvement in overall business profits over time. Number 12. Business Loan Schedule. A business loan schedule lists every business loan, including the original amount, remaining balance, interest rate, monthly payment, and repayment deadline. It gives owners a complete picture of their debt obligations and helps avoid missed payments or unexpected financial pressure. This document also supports better cash flow planning and allows owners to evaluate whether refinancing or early repayment could reduce long-term borrowing costs. Number 13. Fixed Asset Register. A fixed asset register keeps track of long-term business assets such as equipment, computers, machinery, office furniture, company vehicles, and other valuable property. It records purchase dates, purchase prices, depreciation, maintenance history, and current value. This document helps owners manage business assets efficiently, calculate depreciation correctly, simplify insurance claims, and maintain accurate financial records for both accounting and tax purposes. Number 14. Financial Dashboard. A financial dashboard combines your most important financial information into one easy-to-read report. It may include revenue, profit, cash flow, operating expenses, accounts receivable, accounts payable, and other key performance indicators. Instead of reviewing multiple reports separately, business owners can quickly understand the company's financial health in one place. A well-designed dashboard supports faster decision-making, highlights warning signs early, and keeps business finances under control. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.